trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to take a look at Caterpillar. We were looking at that yesterday and said, it's probably getting to be a sale up in here. Well, it's had gap down today, so we'll take a quick look at it. Now, this is the fourth largest price stock in the Dow Jones, folks. So we're just going to look at it for today's action and see if we can find a little 382. There's where we were. Now we're coming down here pretty sharply. And we haven't made it 382 as of yet, but that's one thing that if you were looking to short this stock, watch to sell it on a 382 retracement. It's only $2 away from where the 382 might be. Usually when you do something like that, it will pay, pretty good dividends, okay? Now, we've also been asked to take a look at the silver market. Just give me 1 second here, folks. I've got to come over here and get the silver market up because it was certainly telegraphing that there was going to be some selling in the silver market yesterday. It couldn't even rally at all. Let's get the hourly chart up. You'll be able to see. You remember we had gold was still going strong to the upside, and you can see what happened here, last Friday when we had the big move, the big ABCD here. Remember, we had gold rallying really strong for a while, but look at this. This thing is just really broken to the downside. And this we're talking about, it's dropped 10%, folks, in 2 days. That's $15,000. That's a huge move here in the silver market. And there were some nice ABCDs. We don't trade silver very often. That's just a personal choice of mine, and I should because I used to love to trade silver and probably should again soon. But you can see there was your ABCD pattern right up there at 33.21, and now we've been coming down, probably getting pretty close to a buy level. Let's just take a look at this on the 4 hours so we can take a look at it. By golly, we're going to come up to one here pretty soon. Let's just clean all this out right now because it's not the end of the world in this one, that's for sure. I'll show you the end of the world on the next chart. Hold on here. We're already below the 382. That means we've got more to go to the downside. So nothing to do in the silver right now. I do believe we're close to a rally in the gold too because it's down $780 from the high. And so we'll see. This is going to go down here to 30, at least another 50 cents lower here to the 50%, 1.618 expansion level is what I would be paying very, very close attention to. Okay, now for kicks and giggles, we're going to have a live show coming up on Friday, God willing, and I think she is. We'll be able to talk about some of the things we'll be trading, but we've got one in the hopper today, folks, so let's get it up here so we can take a quick look at it. This is the hogs. Remember, we've been waiting to sell hogs up there at 55. We got to 50 yesterday, today, and we still got a chance. So if you get a chance up in here, you're going to get a chance to sell the hogs up in this area. We're trading at 77.25 right now. Okay, so if we make just a little tiny adjustment here, and what we're going to do now is we're going to draw the ABCD for the today's action. And that brings us right up here to 77.71. There's your number right here. So we're going to sell the hogs at 77.67. So I'm going to write that in here. This is the kind we'd like to do, 7767. And we're going to risk a stop here. This is what we'll be doing on Friday, 7850. We'll risk $350. That's almost, $350 on this hog order. So we're going to sell at 77.67 with a buy stop at 78.50. That's what we want to be looking for. All right, that's the kind of trade we'll be doing. Now, this is an 8-minute chart, so we could certainly expect to get it up there. You can see we've had several of these bouncing up here, but this is really strong resistance here, from my opinion, in the hog market. So that's another one. The other one that we've been in for quite a while, and we haven't got filled yet, but we're getting closer and closer, and that is our corn. We're up quite a bit right now. Let's just get up here. This is the smaller over the last day or so. We've got an order in here on the corn to buy it back at 416. We got as low as 419 today. This is the action that we've had all day today. We had a little bit of a rally. And what we're doing as we look at this on the daily chart, there's where we want to watch it, because I like this trade from the short side because it's working, and the long side because you're going to be making an ABCD right at the 382 at 416. So I'd like to reverse and go long at that point and put your stop, below here, risk about a nickel, because here you're going to be making C3220. Well, that's going to be about a $750 profit, and you only have to risk $250 on this other one. Your stop would have to be right below here. So that looks like it would be a really viable one, because it looks like it wants to do it. Two reasons why it looks so good, folks. And remember, we talk about repetition. Let's clean all this stuff out here so we can look at it really clearly. The last time we had a really good correction was right here. It was a 5-day correction. Well, let's see, 1, 2, 3, 4-day correction. Here we are, 1, 2, 3, 5. Wait, 1, 2, 3, 4. We're 5 days right now, and we are almost matching that same thing. You see how that comes in right there at 416? Just beautiful. And that would be the 382 off of this low right here. And boom, that's what you want to be watching. So let's watch that closely. Now let's go and take a look at something that we were watching that people didn't believe it when it happened, but we're going to watch it here. And that is on our crude oil right here. Hold on one second. Get it up here so we can take a look at it. Look at the ABCD that we made in crude oil late last. We were doing the show yesterday when I typed this in. See, this is where we were on the show right here yesterday. From there to there was the show, and this is what we were looking for. It got to 78.10. The high was 78.46, and now we're down slightly, folks, just to the tune of about $6,000. It came straight down, but we've had a rally here of about $2 a barrel here just recently. There must be something going on over in the bad place of the world where they're fighting all the time. Let's clean all this out and see if we can find a 382 that it might be bouncing into. So there's our high. There's our low. It's getting really close. We got up there almost 74. High's been 74.66. So watch this 74.90. That might be some resistance at this point. We do not have anything that resemble. Well, there's a tiny mini ABCD here that didn't really complete. So there was no 382 all the way down. It was just basically a $6 correction over 2 days, yesterday and today. Folks, for some reason, October has a stigma on crude oil because it moves up and down during the month of October, going back many years, that it just bounces around a lot. So watch that. Anyway, keep an eye on this at 74.90. We're at 74.05 right now. I'm not even going to attempt to look at the other ones. Well, I will do that. We're not going to have Grace Morris today because the fact that she's traveling and I'm having a difficult time connecting with her. So we'll have her on next week. But tomorrow we're going to have Mike Moore of More Analytics, and he'll have some great stuff on the energy markets that he always does, and that'll be really interesting to see that's really happening. I hope that makes some sense to you. Okay, we're going to take a little break, and we come back. We're going to look at the stock market a little bit. Okay, we'll be right back, boys and girls. Stay with us.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I pulled up the chart here of the heating oil from our low to our high. Folks, there's nothing wrong with my throat except that I have some type of an allergy this morning. This is an hourly chart. We hit the 382 of the low we made way back here on September the 11th. That was the 382 off of that low. Very, if you're watching this and you're trading this long term, I think it's important that you follow these 382s, because when you see these big sell-offs like this and they stop exactly at 382s, let's just check to see if that one did the same thing. There was your low here. Try the actual drawing tool, Larry. There's your low right here. We went up and made a new high, and look where we stopped here, exactly at the 382. Where does that measure to? Right up to here, and look what's happened so far. So as long as we don't get below this level right here, we've got pretty good chance. It's rallied 2 cents already during that time. Now, people like, not people, but traders like Mike Moore follow that complex. Now, I follow stocks and currencies and grains and all that stuff, but his specialty is the energy complex. So if we take a look at the gasoline, which the price of gasoline here in Tucson is pretty much rock bottom, folks. I mean, I couldn't believe I paid $2.67 yesterday for gasoline. So here's our this is the kind of things we're going to be doing on Friday anyway. Here's where we are over the last few days. Let me clean out all the little lines here from old days. This is where we were back in October when we made the big bottom. We talked about that quite a bit. We've had a huge run up, and all I'm going to do now, and I can see that it's a little below the 382 right now. Oh boy, not by much. It went down by a little bit. Now we're bouncing back a little bit. So this was pretty good. Well, it's rallied 4 cents off that bottom. So that might be a core. This was one that we did talk about, because we always say when you have this big move like this, look for that 382 retracement, folks. I think that's something that you ought to look at, because there's your 382 right here, a little bit below it, doesn't even hit 50%, and then away it goes. You have another little 382 here, and then nothing else right in here. So the oil market's not dead, but that $6 break in crude oil shook a lot of people up over there in Dakar and some of those other places where they trade oil, really, really big time. So we want to remember that. So I want to get this out of the way here. And then I want to talk a little bit about the U.S. dollar index, because that's been jumping around quite a bit. And we'll look at that through the eyes of the euro first, because we have a position in the pound that I will cover here in just a minute. But here's the euro, and it's still, under a great deal of pressure because the market's been coming down quite rapidly here in the last 7 or 8 days, and it's not even finished, folks. All we've done here today this over the last couple of days, look at this. The thing hasn't even bounced. It looks as bad as the bonds do. This thing just doesn't want to go down, and that's good because we happen to be short the British pound. And we'll get this up here, right here, and we'll put the hourly up. You can see that it's also falling, to no avail. But if you remember, I want to remind ourselves why we did this. There's the daily chart, and we're going to go to the weekly because this was the big ABCD pattern. It came in right here. And as we looked at that on the weekly, we were on the air here when we did this at 1.3410. And you can see now we're down well over 3.5 handle, almost 4 handles now. Very close to 4 handles. And I believe this has the possibility, if we start getting below here, below that 130 level, which is 80 pips away, you could be looking at something like this. And that's where you have a really large move. They don't happen very often, but that's what I would be paying attention to. We happen to be doing this trade with a couple of trading buddies when I was visiting some friends across the old seas there when I went to the Bangladesh Hilton for that rice symposium. And anyway, this is where they have the big move to the downside that equals this type of one. We haven't had a rally like this yet. I'm waiting for that. That could be happening at any time. But let's move on to what really counts, folks, and that's these Treasury notes and Treasury bonds. Let me get it up here just a second because there is trouble in River City over here. I've been talking about this. This was the high. Well, that's the secondary high. The big high was way back here. Look where we are now, folks. Since they topped on September the 11th. You can see we've had a big move down. Now, this is the hourly chart. To see it clearly, all we have to do is to go down to the 4-hour chart, and now you can see it. See, there was your first really good support, and it went through there like it didn't even exist. Okay, now there's one that when the report came out, when the Fed was in there, I said look to possibly be a buyer there at 123, 121. Well, it went through there here you can see it at 123 right here, and it went through there so fast it didn't even make any difference to the downside, but we were short most of the way down. Now let's just look at the ABCD move that we've had since this section occurred right here. We'll just clean it out just a little bit so you'll be able to see that we did make an ABCD pattern right there. This is on the 26th. 5 days later, it comes in almost exactly at the 61% retracement. And now, look at this. We are already through the 127, heading lower. There's something wrong with notes and bonds, folks. And I think it's that chart that was given to us by Rich Anderson. I want to show it to you again because it's very, very important. That is this chart right here. Also came from John Jameson. But here is the dot-com bubble. This was the real estate bubble. This is when we had the bottom in the stock market. And right now, you can see here, this thing is rallying. The 2-year is rallying against the 10-year. That means people are scared. They want to know where their money is today, not tomorrow, the next day, but today. So that's why we're paying close attention to this one right here. I hope that makes sense, but that's what I'm watching here as I look at some of these things here this morning as we're going over some charts. Now, let's back up just 1 second here. And I want to show you one other one that we've been watching real closely here today, which is the Dow Jones E-mini, because we short that. And you can see here what we've done is we've gone up and we spent here all day today at the 382. There was the open. Market came down, went up there again. 3 times it hit it. Okay, now that's the 382 off the whole move, folks. The one we had back here. We shorted it right there. At 42683 is where we sold it, and now we're setting a few points under that, which is so good. I recommend putting your stop up in this area right here is what I recommended, because if it gets there, we've done something wrong, and hey, believe me, you do things wrong, you get out of Dodge and don't mess with it, because that's one of the things, folks, that I've learned had an instance of that today. I made a trading error this morning, a buy-sell error. It cost me $440. I immediately corrected and got my money back. But, neophyte traders, people that are new to this, they hope that the market's going to come back and get it at a profit. And no, you got to stand aside and say, no, can't do this. You just got to stand aside and wait to see how it works. This is what's going on. Now, people have asked me about the storm. Folks, I've been through lots of this stuff. Katrina, the tsunami stuff over in Thailand on Christmas Eve of 08, and that was a 14. That killed 250,000 people, folks. All right, let's take a little break here. 877-927-6648.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we've been on the air here for a half an hour. We talked about gold with the double ABCD patterns at 26.29. The low came in here at 26.23. You can see this is an hourly chart. But remember, we've only been on the show for just a little while, so I'm going to put an 8-minute chart up. We've only been on a few. There's where we were, okay? And right when we started the show, right there, okay, and look, came all the way down and rallied up. Not much, but it's $1,000. I mean, so that's an important number that we hit at 26.35. Now, I'll be watching today because we had that really big high up in here. That's down, we're down, wow, that's down $50. So the 382 on this could take us here to 342, which would not be unusual. We've made a slight ABCD pattern here. That's all we've really done. But, basically, I thought covering the short down there, I said that in the video that I sent out this morning. I sent one on the stock market for the Dow Jones. I sent one on about the crude oil, I believe, and I said something about the bonds and notes, and, of course, the British pound and the corn. Corn I like the best. If you can buy corn at 4.16, cover your short there from 4.32, and then also go long, because I love corn on the long side there, folks. If inflation's coming back here, and it certainly could, then we're looking at something that's going to be quite nasty, and that's what we want to be watching, okay? So that's the gold market. I don't want to get into silver because that's something that I'm not trading right now, so it's not too important. All right, let's move over here and get over to those Treasury notes, because that's the one that runs the whole show, folks. That's your mortgages, auto loans, personal loans, credit cards, all that stuff. We're going to get this up here. We'll start out with the weekly. I've said many times when we were back here making this is the first big ABCD that we've had on a weekly, okay? There it is right there. We haven't had one of those since 2021. The market topped in 2020 at 173, and look where it is now. Oh, bonds were 173. These were a lot lower because they have a different value. Let's get it up here. They were at 140. So 140 all the way down to 107, and now we've had a big ABCD here that we're watching. So let's move over here to get onto the daily, because we went to the 382 here today, folks. Let's show you where we are. We're still there. We've made lower lows. We're actually trading one tick above the 382, so this means maybe this rally is getting ready to happen. There was the 2 days right here at 112.15. The low has been 112.10, and we're trading at 112.16. This market's extremely oversold, and it's setting right at the 382. So I've been dabbling with the bonds. They spank me twice, 10 ticks each time, but I keep trying. And sometimes it takes 3 or 4 times. Fact is, Larry Williams has just retired, but one of my favorite quotes he always talked about was Paul Tudor Jones was being interviewed by the Wall Street Journal, and the reporter said, boy, he said, it must really be something to be Paul Tudor Jones to call the exact bottom, the Treasury bond market, before they rallied 15 points. And Tudor Jones said, well, that's only partly true. And he said, what do you mean? He said, yes, I did call for the bottom in the Treasury bonds, and they did rally 15 points after I was wrong 5 times in a row. And that's exactly the way you got to look at it. Some days it's chicken salad, some days it's something else. So you got to it's not how much money you make, folks. It's how much money you don't lose. And therein lies the rub. When you can do that, then you've got a really good chance at something that'll give you moving in your direction, because you only have to be right just close to 50% of the time, because ABCDs works about 62% of the time. So if you can narrow it down to 50% of the time, you should be okay. So we got the notes covered. We've had a request, of course, for Apple. What a strange request. Just gets it up here. I do not. Oh, the only Apple product that I own. This is doing really well for a downgrade. Oh, it's weekly. Sorry, just a second here. Still doing well. See, there's the downgrade. It really didn't do very much. There was the downgrade came in. Let's just go to the 4-hour chart so we can, 60 minutes will do it. There's the downgrade. Let's clean this out right here. I forgot to turn off my telephone. Not to worry about it. No one's going to answer it. We're okay. There was your rally back to the 50%. Now, we had a rally today, And what we're looking at right now is the level at the 382 was our high so far today. Still looking like it could go a little bit lower to the downside. Anyway, that's what we're paying attention to here with Apple today. And of course, we need to look at Tesla, and we'll get that up here so we can see it closely. And then also someone wanted to ask something about Nvidia, and I'll do that just a second. Let me do Tesla first, because Tesla starts with this. Okay, see how it's holding on. Tesla's doing really well, folks. That's the weekly. Let's get the daily up here. And there it's just backed off a little bit. I mean, it's not really doing very much at all. I think it's holding up incredibly well. If we go from our low right back here, it hasn't even made a 382 retracement yet. That comes in here at 232, down about $12. We had a little bit of a rally here. It looks like it's right about 60%. Nope, it looks like it's pretty close to 382. That would have been right here. And if when markets turn, folks, watch that 382, because it'll see it didn't even get above the 50%. That's exactly what's happening here with Tesla right now. And then also Nvidia, I will get that up here to talk. I don't do anything in stocks, folks. I just look at the patterns in the stocks. I haven't traded them, and I'm not going to start now. Okay, there's Nvidia on the weekly. Well, we have, whoa, that's a big high up there. That type action is split. Sorry. Let's go down to the 4-hour. Maybe we'll be able to see it. Oh, it's doing pretty good, actually. It's up today strong. Yeah, it's up doing pretty good. Let's see if we got an ABCD. Oh, we do. We got an ABCD coming in here on this, and we'll just draw that in and see if we can see it. And then we're going to take another little break and bring you folks back to the promised land. Boy, if you've ever done any praying, folks, this is the time to do it, because that storm is a real big monster. And also, we have a very dear friend over in Hong Kong that just had a beautiful little baby girl, and she has some problems. Oh my God, she's so pretty. Only a day old, but you got to say she's having some difficulty. Now let's get back to the charts. We have a small 3 drive here on a short-term basis right here. See this making this new high? This should really go charging ahead. So, and it's 10 points higher. We got a big ABCD over 2 months, folks. 2 months. That means there should be some really strong resistance up in here. All right, we're going to take a break. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, someone asked me what is the one chart that concerns me more than anything, and it's this chart from Goldman Sachs. It shows you the fact that the futures business has got a big bonus on the upside for anybody that's bullish. And in fact, this is at record highs. There have never been this many long positions in the equity indexes of the stock market. That's, to me, very, very dangerous. Now, let's go back for just a second. If you remember when we were talking about the gold market, let's get this up here. When the gold market was trading up near 2,700, the one thing that I was doing, someone asked me that question, what I was doing. So if I come up here, I want to come up here and show you what I did. I would go to the CME. See, I'm just going to go down to where it says daily volume. This takes you to the CME. Okay, and then all I'm going to do now is to click on markets. Okay, and then I'm going to go to the gold market right here. All right, and then when it gives me a chance, what do I want to look at? I want to look at volume and open interest. So I click on volume and open interest. Okay, now all I'm going to do now is to come up here and show you that every day that you're doing this, all the way it tells you what you were doing. Now, we topped 2 weeks ago, so all I do now is to check to see if open interest is either decreasing or increasing. And you can see here it's been decreasing. That's because players have been leaving the market. This started on the day the top was made at 1708. So when players stop coming into the market, that means there's less buyers, and that means there's a magnet to the downside. Okay, so now if we have, like we're going right now, since we've been down, what you want to do is you're going to go here to October the 7th, and all I'm going to do now is I'm going to bring down, because December is by far the biggest one. You see this? You see how it's dropping? That's 1%. So there's a few others in here. These are way out, but you're still 4,000 net, and that means there's no buyers or less buyers. And so all I'm adding that, because if you have people buying all the time when the market's going up, it's not going to go down because people are still buying. The problem what you're running now, let's just do it right now together since we've got a nickels and dimes here. Let's just go to markets again one time, and we'll go over here to the stop and P. The S&P 500. And here's where we are. Now we're going to take a look at the open interest now. And here's where we are. It's been going up for quite some time. Let's just get the volume and open interest here. Just click that on, just like that. And the figures will be right there in front of you. And you'll be able to see here. This is the open interest figures. You see how open interest is flat right here? Okay, see how it dropped after the big drop? So there's not many players coming in. We'll just look at it right where we are. Look at the net change here, 13,000, folks. That was on a big run up, 15,800. It dropped. This is not bullish action. Well, it's my interpretation. I hope that helps you, because that's some of the things that, I only look at the open interest when we're making new highs or new lows. That tells me whether there's players coming in, players coming out, but all I base everything on is a simple old thing called A, B, C, D. That's basically the bottom line. But this, my friends, if you're involved on the long side, be careful. Or like the old adage is, be afraid, be very afraid, because you're going to have tax problems if you make too much money, but they're going to take it away from you. And when they do, it's not going to be pretty. That's what history has told us, but this is not always the case of what we have going on here. So let's get up here to some of the other things that we're paying attention to here. All I'm doing now is I'm going to, when you see all these lines and stuff like this, folks, all I do is I can see what I'm looking at, the positions. I have no positions in the euro, short a little bit of this. I'm flat this right now, waiting for a rally. I should have bought it, but I didn't. Well, ifs and nuts. Pound still going sharply lower. Bonds, I took a loss in those twice in a row, so I'm not touching those. I want to cover my short corn here at 416 and go long. That's what I think is my best trade, but just because I think that doesn't really mean that that's going to happen. Okay, so big deal. All right, now let's get back up here, take a look at this crude oil, because we're getting really close to the possibility of a 382 in this right here. Now we've had a big move down, $8, right? $6. Now the rally back is at 74.90. All right, now if you believe in 382s like I do, this is going to be the first 382 that we're going to look at. We're at 74.90 right here. We're almost there. Now we had a big run up here. Remember, it's been rallying for an hour and a half, so we're going to get there. I would be really surprised if it doesn't. I'm going to put that alert on right here, because if it gets there, what I'd like to see is I'd like to see a little A, B, C, D move right here. But I got to sell it here. And the reason why is, folks, if you can sell it there, that means that all the time this thing started up, remember we pointed out these 382 retracements each time? If you can buy the 382, you got to sell the 382. And why? Folks, you don't know which one's going to work and which one doesn't. What you got to do is when you put the order in and you get nailed, you just shake it off and don't even think about it, because it's just like if you were a cold calling, trying to get somebody to buy insurance or something. You're sure you're going to get hung up on, 90 times in a row, but there's going to be 10 people that want to buy insurance. And that guy that keeps dialing will miss those first 89, and then he'll do the last 11 and he'll get 9 out of 11 or something like that. And that's how you do it. So it's just a question of, probabilities and not functioning on, fear of missing out or anything like that. Just put the order in, you get stopped out, you move on. Now, one thing I will do here, now remember, we're up an hour and a half now. So what I'd like to see, this is what I'd really like to see. Let's just get down to really small. We'll get down to the 4 minutes so you can see that we've had a pretty good run up here. Now, 4 minutes, you can't do too much, but we haven't had a 382 retracement yet. See, it had a little, maybe we did. Let's just look here. Let's go to a 2 minute, that'll put the AI in there, but we can get over that. Well, this is what it said it was supposed to do, and it's rallying. So there's the 382. Let's see if we did it. Okay, there's our high right here. There it is right there, 382. That's $500 right there. Just looking at it. In fact, the AI was saying it was getting ready to rally, and it's supposed to rally the rest of the day. Hey, remember, this is the last part of the day, is the part that it doesn't work good. So watch that pretty closely. All right, that's what we're paying attention here with the crude oil. All right, so got a chance. So we'll see what we're looking. These are kind of this. I've had this trade right here on Friday. Close my eyes and buy it, because big run up, boom, bang, bing, and look at this. Had plenty of chances. Boy, I like that trade. But just simple stuff, folks. It's just nothing, anything that's really dramatic or anything like that. It's just a little 382 action, and how the market moves intraday, and that's really what I'm trying to do. Hope you can join us on Friday from 9 to 12. And with this type of volatility that we're having in the market, boy, we should have some pretty good ideas for trades, because, boy, there's a bunch of them out there. No question about that. They're just about everywhere. And I think the old clock on the wall tells me that we've got 43 seconds left. So we had one other question, and that was about a stock, which I'll try to bring this up here. And that was, hold on, where's the G's at here? Goldman Sachs. Here we are. There's Goldman Sachs. We'll get it up here. It's holding up really good, folks. And this is the weekly. Let's get down to the daily. And you'll see it here. We had a big move now. It was up earlier in the day. now it's basically looks like it's unchanged on the day. We'll put the smaller time frame up. Yeah, it's basically unchanged on the day. We had little lower highs in here for the last few days, but there's nothing really super dramatic in here that I can see with Goldman Sachs other than the fact.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, someone asked me what's the most important chart that I talked about here over the last hour. It's got to be this chart here on corn, folks. If you like ABCD, you can see we had a beautiful ABCD pattern right here. We were looking to be a buyer back there, if you remember, in August, right around the 28th. There was your ABCD. You can see the beautiful ratios. Then, believe it or not, we had the ABCD to the upside, and we sold it up there at 32, which was the 382 on the long-term weekly. And now look where we are, folks. We're coming down, and we're making an equal retracement here. Just absolutely spot on right at the 382, which will also be setting right at the old 618 right there. Look at that. That's Mother God and Country. If you can't buy that, go to the fair and find another Cupid doll, because that's going to be a beautiful trade if it gets there. Now, maybe it doesn't. Maybe it takes off from here, but we got to give it a chance. Right now, we're sitting here with a 12-cent profit, only $600, but we got our stop at break even now, which is up here at 432, and we're going to wait to see if we can buy it at 416, and we're going to go cover the short and go long with our stop right below here. So that's the kind of setup that I used intraday, whatever it is. I'm just an ABCD type person, but by golly, you see these darn things all over the place in here. In fact, just looking at this corn chart, if you were just watching some of these, you can see there are a lot of them in here. And all you got to do is decide which ones you're going to take and how much you're going to risk. It's not how much money you make, folks. It's how much money you don't lose. The words of Mark Douglas. And I sure miss that guy, but, I'm sure he's doing great work wherever he is these days. All right, that's pretty much it. So let's pray for everyone in Florida and all the rest of the world. Maybe the hurricane will back off a little bit and save the rain for another day. Maybe bring some over here in the desert. We could sure use some. So live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side at another time.